Hello and welcome. You're watching Earnings Edge right here at NDTV Profit. I am Puneet Zaveri. We're now joined by Mr. Vidyashankar Krishnan, Chairman and Managing Director of M&M Forging on the back of the strong Q4 earnings. We speak to him on Q4 financial year 24 as well as what he thinks of how the next fiscal year is going to be. Good afternoon, sir, and thank you so much for joining us today.
Thanks for having me on the show.
Now, sir, I just wanted to start with Q4 earnings firstly, and also your synopsis of how the financial year 24 has been. We've seen certain challenges for the fiscal year, which you have highlighted previously in a couple of our interactions as well. How do you see, the end of Q4? How are you seeing the beginning of the next fiscal year? And if you could just run us through what is your analysis of the same?
We ended Q4 around similar levels as the previous quarters. In a sense, Q4 of FY24 was just under 400 crores. And comparatively, from our expectations, we should have well crossed this by around 20-30 crores on the other side, on the positive side. So Q4 was a lot dull because of a very sluggish CV market.
Understood, sir. Now, I want to just talk about, I think previously you had mentioned guidance of roughly 1,700 crores at the start of the year. That was lowered to 1,600 and the company has ended with roughly around the 1,500 crores of revenue mark. Now, you did aid to, the CV cycle being sluggish for this fiscal year. If you could just talk us through that and how are you seeing the next fiscal year? Because we are seeing, we are in the middle of the largest election in a democracy. How are you seeing the CV cycle revival? And also on just the missing on guidance, if you could talk us through that as well.
Sure. Just clarifying the numbers of the previous year vis-a-vis the guidance, we have achieved 1,585 crores consolidated as against a revised guidance of 1,600 crores for the year. So we almost, you can say that we've kind of met it. Would have been nice to have crossed that number though. So on one side, we see that happening because of the CV market. We see this year, we should see growth in the early double digits, around 10 to 11% for the overall year. First half will be sluggish, almost on terms as the previous year, not much of a change. And the second half should carry this forward.
Now, one thing that you had also mentioned is roughly 18% guidance for the EBITDA margins for this year. You have met and also crossed that level. What kind of initiatives has the company taken for these EBITDA margins, meeting them despite a miss on revenue? And also for the next year, you had guided for roughly 20% margins. You are already there. How are you seeing the next year for margins as well, if you could talk us through that?
Sure. A year back, we were doing about 18.5 or 17 to late 17s to 18.5% of margin. This year, FY24, sorry, we have achieved 19.4%. We would expect this to cross 20%, as I have indicated earlier. We would expect this to cross 20% mark in Q2 and Q3 of this fiscal. So overall, going forward, I would like to focus on crossing the 20% mark first, and then looking at improving it further on. So what have we done to improve this? Basically, increase the value addition of parts, which we are machining across all locations. So that has gone up. And we have initiated a lot of cost compression initiatives. Those are bound to take effect in the next 2 to 3 quarters. So by Q3 of this fiscal, we should be seeing better numbers.
Now, in our last interaction, we did speak about exports and the share of Europe as well as USA. Currently, I think if I'm not wrong, it's around please correct me if I'm wrong, around the 35 to 40% range of total revenues. Now, you have been guiding us for a comeback of replacement demand in Europe for the last few quarters. Do you see any signs of revival at the moment? How are you seeing this export market? Because we are in the middle of a lot of geopolitical crisis But just on these two fronts, on share of current Europe as well as USA, what kind of share are you expecting in the next year, and just the market in general? Do you see the replacement demand market coming in the next 12 to 18 months?
Europe is, I think, the geopolitical events over there and overall macroeconomic conditions are kind of shadowing or clouding the performance in the Eurozone area. So I would expect that Eurozone will be slightly muted as an economy on heavy trucks and overall as well. But for Forgings, because of the slightly uh, higher requirement of replacement demand and so on, we see some traction in Europe. USA also, the American market also we see overall improvement over there because of better class 8 movement in the first 2 months of this fiscal. Now that steam is kind of the steam unit is kind of petering out, so we will see the kind of slowdown in the class 8 trucks for the next 8 months, and the next fiscal is expected to be next calendar is expected to be a stronger year for class 8 trucks.
Now,
having said that, we are looking to increase our presence in those markets by a slew of new product launches. So overall, I would say that's positive for Forgings.
Now, if is there a kind of quantification that you would give us? Where do you see the share of Europe and USA for fiscal year 25 in terms of revenue? And also the point that you touched upon, that the Class 8 trucks, we had seen a month ago that they were revised downwards. That earlier the decline was seen at roughly 15%. Now it's seen roughly around the 9 to 10% range. Do you see that this recovery is dependent on a few factors that have to be going in favor of the industry, or do you see that generally around this could be a slightly lesser decline than mentioned?
For Forgings, I can say that the Class 8 truck demand, which has come down slightly in the US itself, will not make much of a difference because we have our inventories are pretty low at this point of time. So we would customers want us to stock up at their warehouses. So that would cause or provide us some increase in sales in this few months. And we are also looking at newer products being launched in these zones. So that also will add to our sales, at least keeping it chugging along without any significant concern on fall of revenue, with a positive bias towards growth.
Now, anything on quantification of share, or where do you see Europe and USA for this year?
Overall exports stood at about 35%. So that number would continue to hold for us. And we would expect the share of US and Europe to be in the region of 27-28% overall.
Understood, sir. Now, I also want to talk about the new emission norms that's coming in by roughly 2027 in the US. Now, there was some kind of pre-buy that was expected to start from 2024 to leading up to when the norms are between around the 2026 range. Do you see any kind of conversation that have already started on this, or do you see that this is still some time far away? Maybe by calendar year 2025 is when these talks on pre-buy will actually start. Any kind of outlook that you could give us on this?
That's a very valid point. 2024, I think, was a little too early for any kind of pre-buy. So 25, calendar 25, we should see more pre-buy coming in. Certainly. This is what customers are, tier 1 customers are telling us.
Now, I also want to just discuss the EV opportunity that the company is present in. You have made a couple of investments also in this space, and you had previously mentioned with us that You are present in the 15 to 20 kilowatt space for motors. I just wanted to understand what is your outlook on this space, and I just wanted to get some more detail. Is this specifically in the domestic market, or are you seeing this in the international market as well? Some demand for you, and you had mentioned that previously that you're only the company that is doing a lot of the innovation in this space. So anything on competition also, if you could tell us.
Sure. Um, Throwing some light on our subsidiary Abhinava Raisel, which is into these EV powertrains. We are uniquely placed to design EV motors from 3 kilowatt to 300 kilowatt. So right now our designs on the shelf and just going off the shelf are about 100 to 150 kilowatt is our peak, what we have physically designed, but our capability exists to go much higher. So we've developed a slew of these products, and many of these have gone to testing at customer end or at our end, or even prototyping. So all this is, we are one of the unique companies in India to offer customers. Very recently, even I participated in a demo at a customer end where we went to the customer with a 60 kilowatt motor. Nobody else had done it earlier. Nobody in India has come anywhere near that. So our ability to design motors is perhaps unique in the country, and we expect to take this forward very strong.
And do you see any kind of difference in the margins for when you're supplying for the EV space? Do you see any kind of increase in margins, because you are saying that over 60 kilowatts there's no company in India that's doing it. So are you being able to charge a premium for the services that you are offering?
Here, what happens, Puneet, is that it's not just the Indian competition that comes in, that at this power level, the competition is international. So we are benchmarked not just with Indian companies, we are benchmarked again or with uh, suppliers from China as well. And China, as you know, is a well-developed market as far as EVs are concerned. So pricing from Chinese offerings is pretty stiff. The competition is pretty stiff on the pricing side. We are still able to put our nose ahead, but just a little bit, not by huge numbers. But we are a startup compared to the pricing of established players from China. So that itself, I think, is commendable.
Understood, sir. And my final question to you now. Now, you had mentioned that any kind of guidance on the next year for revenue will be post Q4. I just wanted to understand where are you seeing the market for the next year? What kind of number? If you could share with us any kind of numbers on the guidance for FY25 on revenue as well as margins, if possible.
Sure. We see the CV market almost moribund right through the year is what our customers tell us, with single digit growth, maybe touching double digits across the year. So that is not, very hugely positive, but our wallet share with customers is going up. So that means that is pretty good for Forgings. I would expect, therefore, the Indian market to be kind of muted, and overall also considering the sentiments in Europe and in America to be slightly underplayed. We can look at, I'd be happy to touch double-digit growth in this coming fiscal.
So largely this would be around the 1800 crore range that earlier on. And on margins, do you see, because we have seen strong performance this year, 19.4% as you highlighted, do you see it crossing 20 or crossing the 21% range as well?
I would say I'd cross 20 first and then walk the talk from there on.
Yeah.
And subject to macroeconomic conditions and these turnover levels holding, margins should also improve from here on. And at that stage, a year from now, we expect to push it further. Oh, surely. That initiative is very much on the cards at our end.
Understood, sir. Well, thank you so much, sir, for joining us today here at NDTV
Thank you.
Profit,
Thank you,
and
Puneet.
giving us a much detailed guidance of how the year was and how the next year looks like. We look forward to our next conversation with you.
Thank you very much. Thanks for having me on the show.
Thank you, sir. Now it's time to slip into a short break. Stay tuned to NDTV Profit for more.